Welcome to today's discussion, Regulatory Reporting and Data Management. My name is Patricia Lee. I'm a journalist and a contributor to Regulation Asia. The topic we are looking at today has taken on particular significance in the last few months in light of the COVID-19 pandemic. We know that regulators in the Asia-Pacific region have raised their standards on regulatory reporting in the last 2 years, with an emphasis on the use of data for more effective reporting. But the use of data has given rise to a different set of challenges in data management. Along with that, system implementation challenges that come with having to deal with the new reporting requirements. Okay, joining our panel of experts today, Patricia Lee, Director, Risk and Regulatory, PwC Southeast Asia Consulting in Singapore, Joanne Horgan, Chief Innovation Officer, Vizor based in Dublin, and John Rayment, Chief Executive, Identitii based in Sydney. Welcome, everyone. So I'd like to start by asking each speaker to give a brief introduction of themselves and organizations. Could we start with you, Catherine?
Thanks, Pat. Great to be here. Hi, everyone. I'm a director with Southeast Asia Consulting in PwC, and I basically lead the BCBS 239 and data governance initiatives for the region. My role primarily focuses on helping financial institutions deal with data-related projects to address regulatory compliance.
Perhaps we'll start with John, with an introduction of yourself, John.
Patricia, hi, thank you. My name's John Rayment. I'm the CEO of an Australian software company. We're called Identitii, and we help financial institutions solve the problem that regulators and customers are demanding more detailed information about individual financial transactions, and the underlying technology being used to generate these transactions really struggles to deliver it.
Okay, thank you, John, and welcome. Okay, so I'd like to kick off this discussion with an overview of the changing reporting requirements in major jurisdictions in Asia, and whether regulators in this part of the world have added new reporting requirements as a result of the virus pandemic. Let's start with Catherine.
Sure. Okay, so here in Singapore, right, actually, MAS has issued a number of measures to help the FIs focus on the pandemic response. Some examples could include deferring the implementation of regulatory reforms, extending the reporting timelines, and deferring some industry projects. We have also suspended some on-site inspections and supervisory visits, as well as also to issue some guidance to help address operational technology and also cyber risk. In terms of evolving reporting requirements, even before COVID-19, I think MAS has already been issuing revised reporting standards for banks in Singapore to take effect from October this year. And this is actually in line with MAS's objectives to collect data in machine-readable format and to also reduce duplicate data submissions by financial institutions. I think this has resulted in much more granular reporting, as can be seen in MAS 610, which is a huge submission required on a monthly basis. Also noted in Hong Kong, right? I think the banks and regulators are also actively exploring the use of AI to streamline the compliance procedures and integrate technology into the supervisory process. New initiatives include introducing, again, machine-readable regulations and automation in data collection from banks for obtaining new insights or to detect irregular activities.
Okay, thanks very much for the overview, Catherine. John, could you give us an update on what has happened on the reporting front in Australia, and perhaps a bit on the Asia-Pacific region as well, given your interactions with clients in this region?
Sure. It's interesting what Catherine said regarding the increase in the amount of data with the regulatory updates that are coming through. That seems to be universal throughout the region. Whilst it's not limited to COVID-19, it's certainly accelerated the trend. In Australia, in more recent times, we've already seen an increase in reporting requirements and with it regulatory burden on reporting entities coming out of the recent Hayne Royal Commission, and now even more so under the lens of COVID-19, with it the increase in financial crime. Another trend that we're seeing here, of course, or around the region, and it won't be confined to Asia Pacific, but it's the notion of regulatory fragmentation. What I mean by that is that no two regulators or no two regulatory jurisdictions are the same. So institutions have to understand how to comply with regulations that are just ever so slightly different if they are present in more than one jurisdiction. And that puts pressure on reporting systems and pushes compliance into manual channels and makes it harder to ensure that it is complete and accurate. And I guess from an AUSTRAC perspective, closer to home here in Australia, AUSTRAC was the first, of course, to introduce IFTI reporting for both incoming and outgoing international transactions. And globally, we're still not seeing TTR and IFTI reporting in major financial and business hubs, which is exposing foreign money laundering risks. And it's heightened today with increase in financial crime risks that we're seeing under COVID.
So my name is Joanne Horgan. I'm Chief Innovation Officer here at Vizor. Delighted to be joining you finally today. Vizor is a sub-tech data platform. We're used by 30 regulators around the world, including MAS and APRA. We help regulators find, collect, validate, and process regulatory reports and risk data. We've now made our regulatory reporting solution available to financial institutions in Singapore and Australia. So I'm still having a little bit of trouble hearing you, but maybe if you want to type and just let me know which point we're on while I try to get this working.
Sure. So we kind of got started with the first question, which is an overview of whether there's any changes in regulatory reporting requirements. My question to you is, what are your observations in the regulatory reporting requirements following the COVID-19?
Yeah, so I guess some of the changes we've seen working with regulators across multiple jurisdictions. You know, we work with regulators like the Bank of England, APRA, and MAS. They've extended reporting timelines, delayed some planned initiatives and new reporting requirements. But while we've seen this kind of easing of pressure on the one hand, we've seen an increase in new ad hoc data requests on the other. So, for example, APRA have introduced a weekly reporting requirement to gather details of new loans that have been granted under the Australian SME Guarantee Scheme. The FCA in the UK, we've seen them, they've surveyed about 30,000 firms to try to assess their level of financial resilience. And what was interesting with that example was, you know, they turned to SurveyMonkey to gather that data, which highlights a common problem we see amongst regulators, where they sort of have a choice between sort of speed of collecting data and speed of launching something versus maybe, you know, managing data correctly and having that data already. So I think we have seen, as I said, an easing on one hand, but also an increase in new ad hoc data requests from regulators. We've also seen others like the Monetary Authority of Singapore. You know, they started offering new support packages for the industry and wider fintech, RegTech ecosystem with grants and tech sprints, etc., which is a welcome thing to see as well.
Okay, thanks, Joanne. So you have actually sort of mentioned something about data. So I think that's data challenges, probably one of the problems, biggest problems faced by financial institutions in regulatory reporting. Joanne and John, both of you work with financial institutions a lot. Could you share with us some of these data challenges that financial institutions face in regulatory reporting? Perhaps we'll start with Joanne then.
Yeah, so I guess working with both regulators and financial institutions gives us a bit of a unique perspective in the challenges in regulatory reporting. And I guess we broadly categorize the challenges into two main areas. So the first would be interpretation and implementation of new or changing requirements. So, you know, we see a large cost for every new requirement that comes along or change a requirement from a regulator. We do see some changes here, I think, that are coming, which hopefully will help. So we see regulators wanting to move to more data standards, so more standard ways of collecting data, more granular data models. We've seen in Hong Kong, for example, they started some granular data collections and moving away from maybe that aggregate type of data. The second challenge we see broadly would be around the legacy architecture and siloed data sources in banks. So even when the data requirement might be clear from the regulator, there's still a number of source systems, sometimes hundreds in some cases, that banks have to ETL their data or transform that data into the regulatory reporting format, which is quite difficult.
And John, what challenges did your clients face in managing data?
Yeah, I just want to pick up on something Joanne said, which I think is really interesting. It's certainly a theme for our customers or the people that we're interacting, and that is the notion of interpreting regulatory requirements. You know, the regulatory requirements are not as simple as following a recipe, a step-by-step recipe. It is open to interpretation. So that's probably the first main challenge, is getting crystal clear in your mind what exactly the regulator does and doesn't want to see from an institution. And against that lens, of course, I think the larger problem or the larger challenge for our financial institutions and regulated businesses is that the underlying technology that much of the industry uses is not new. And more often than not, a collection of dozens, if not hundreds of individual systems that have been hobbled together to form an institution. And they don't do a very good job of talking to each other very well, and they certainly make it difficult for financial institutions to get a single view of all of their transaction level data. And when you don't have a single view of all of your transaction level data, reporting, running analytics, running machine learning, running AI across it, if the base level information is fragmented and exists in silos in different message formats, it can be very, very challenging to manage the data.
And does your company have any solutions to help your clients in this process?
Yeah, look, it's the very reason Identitii exists. Identitii exists to solve the problem that sort of this growing gap between the expectations of regulators and customers, as I said in the opening, to see more granular level of information at a transaction level, and the fact that the underlying technology just can't do it. And there has to be a way for financial institutions to be able to meet the demands of regulators and customers without having to expose themselves to costly and risky significant change projects to replace the underlying core technology.
And Joanne, do you have something similar that helps your clients?
Yeah, so we provide a regulatory reporting solution, Vizor Reporting Centre for banking and insurance in Singapore and Australia. So essentially what we do is, again, maybe, pointing to that level of interpretation and implementation that banks have to do today. We deliver the regulatory data models and rules directly from the regulator. And that means that, having that kind of synchronization with the regulator system means that the cost of change is cheaper, it's faster when the regulator makes some changes, and also it just means that similar to what John mentioned there, we're not looking at having to drastically replace what's already there. We sit alongside existing data warehouse or existing regulatory reporting solutions that might have already been in place, and just provide that extra level of pre-validation, sort of guaranteed right first time data for the regulator.
True. And Catherine, you work with financial institutions a lot as well, so I'm sure you hear a lot of these issues around data.
Yeah, certainly.
Could you share with us?
Yeah, I think the process of reg reporting has always been a pertinent problem for banks globally. As John mentioned, significant amount of time is going to be needed to interpret the regulation, trying to comprehend and interpret what the principle-based kind of regulations, for example, and then trying to source for the correct data within the whole spaghetti of diverse and complex IT landscapes, right? This will be especially difficult for global banks with operations in multiple jurisdictions with different standards to comply locally, whilst trying to drive standardization globally across the group as well.
Before we move on to the next question on system implementation challenges, we'll take a few minutes to do a quick poll. I'm just going to read the poll right now. Are you undertaking a change program to improve your reporting systems and processes? Yes. Doing this now? Yes. Kicking off in the next 12 months? Yes, but no time frame. No, we have no plans. So we'll wait for a few minutes for the result. I think it'll be interesting to see what comes out of this, because I think this is kind of related to the next questions that we are looking at, which is on system implementation challenges. I think we probably have to move on to the next question now. I'm really not very good with technology, but please bear with me. So we're trying to show the poll result in a few minutes, but just conscious of time, I think we have to quickly move on to the next questions, which is about implementation challenges. So where are financial institutions now in terms of implementing system change to deal with the new regulatory reporting requirements, and what would you recommend as best practices for implementing change and managing data? I'm going to pose that question to you first, Joanne.
Sure. Yeah. I think what we see is, generally any change that comes along, especially a big reporting requirement change like we had with MES 610 in Singapore or EFS in Australia, they tend to be big projects, so we're talking about, so the projects can go on for a year, maybe 2 years, quite a large cost to each financial institution. I don't know how much has been discovered really about where that cost lies in Asia, but I know in the UK, for example, the FCA had done a survey on reporting costs for mortgage data, and they found that about 15% of the cost was interpretation, 30% in preparation of the data, 40% in production of the reports, and then the final 15% in sort of communication queries with the regulator. So you see that sort of 70% of the cost is still there in that kind of preparation and production of the data, going back to some of those challenges we spoke about with legacy systems and sourcing data. So I think, the cost of change is still very high. What could maybe the industry do a little bit better in terms of managing data? I think there's probably a couple of things. From a regulator point of view, I think what we're seeing is a trend amongst regulators to collect more granular data, as we mentioned. Also a trend towards digital reporting, which we're going to talk about at the end. Ideally having more data standards and more clearly defined definitions of data that's required from each bank. Banks themselves, then I would say, probably need to focus more on their own data governance and management first, more broadly, not just in the context of regulatory reporting, and maybe stop looking at implementing solutions for each reporting requirement. So trying to get a solution that's going to be future-proof, that's going to not just deal with the reporting requirements that are there today, but considering the way that regulatory reporting is going to go into this more granular data, maybe use of APIs, machine to machine, etc. So trying to keep that in mind. And not just looking at a sort of tactical solution for the current challenge that they have. So making that probably bigger investment, I would say, in data governance and management.
Thank you, Joanne. Catherine?
So I think BCBS 239 has been recognized as the de facto gold standard for good data management principles. We've had a lot of conversations with banks and regulators in the region around this particular regulation. And whilst only in Singapore we rolled it out, but others such as the BSP in Philippines have actually incorporated some of these principles into their local circulars as well. So interesting fact about the BCBS 239 is the regulation was issued back in 2013. And the last progress paper that was just released in April by the BIS showed that only 10 out of 34 globally systematically important banks are fully compliant to that regulation in 2020. That is a good 7 years journey, and only 1/3 of them are fully compliant. Legacy systems and other IT challenges has always been the toughest hurdle for any of the banks to comply with, Principle 2. And that's also echoing what John said earlier about IT and the technology part being toughest. And riding on what Joanne said about sustainable change, for it to stick, we really have to focus on developing that strong foundational capability within the organization, not to just focus on achieving compliance per regulation in silo, but look at how you can really establish and leverage that sort of existing standards as a BAU capability within the bank that you then expand across as you increase in scope coverage. And the fact that MAS has enshrined data reusability in its data collection approach makes more sense, right, for the banks to ensure good data quality within your authorized sources, and then ensure that the authorized sources are indeed used consistently across different departments for various reports as and when necessary.
And John, your view on best practices?
Sure. I would agree from a best practice perspective with what both Catherine and Joanne have said. And I would add that, 2020 has been an incredible year for all of us. And I think COVID-19 has probably accelerated opportunities for RegTech businesses as financial institutions are having to do more with less. They are, of course, resource constrained as they have to channel resources, or they're having to channel resources to other areas of the institution to cope with the pandemic, and therefore are having to find more nimble and cost-effective ways to respond to regulators who, by and large, aren't changing regulatory frameworks as a function of the pandemic. So I think there's this unique opportunity for RegTech businesses this year to position themselves as I said, faster and more nimble ways to help financial institutions solve underlying regulatory problems caused by legacy technology.
Yeah, and just an extra point in that, I think what we're seeing a little bit as well is something John mentioned is that kind of interoperability between systems is really important. And banks don't want to end up with 25 different RegTech systems, each doing little bits of their compliance and reporting. So I think that's another trend that we see where RegTechs themselves have realised they need to be interoperable. They need to have APIs or ways of connecting to multiple systems, which is quite important as well.
I think we might have a bit of time here, so I'm just going to ask a very quick question about the use of AI, given that AI is such a buzzword these days. What role does AI play in helping banks meet regulatory reporting requirements? Does anyone have a view? Joanne, Catherine, or John?
Yeah, I mean, I've seen a couple of examples. I mean, obviously, AI is quite widely used. I think, again, probably focusing more on this side of the world. In the UK, there was a survey done and about 80% of the respondents of financial institutions said they were using AI or ML within their business. Now, not particularly on regulatory reporting, but maybe chatbots, etc. But for regulatory reporting, where I've seen AI being used quite successfully is in keeping up to date with regulatory requirements. So AI that is doing text mining, for example, on regulatory websites or publications, and making firms aware of maybe some policy changes that might be coming. So it can even scan, for example, a speech from a central bank, governor of a central bank, and give some insights into maybe policy changes that may be coming down the road, which is quite useful. There is maybe a growing trend towards maybe wanting to use AI in the actual data sourcing and preparation. I think for that to happen, you really need to have those data standards well defined first from the regulator. So having machine readable data models that are written in a common domain model or a common language that machines can understand would help towards that. There has been some proof of concepts that have shown some promise in that space. But I think we're probably a little bit away from a machine being able to go into everybody's source systems and pull the data magically and deliver to a regulator. So probably for now it will be sort of supervised machine learning or supervised AI combination of humans and machines for quite a while yet.
Does Catherine have a view?
Oh, I think Joanne summarized it beautifully. Yeah.
Okay, great. And John, anything to add to that?
Sure, why not? I would just preface it by saying we're not an AI company. However, there are a couple of trends, and just to continue on with what Joanne has already covered, there's a significant opportunity for AI and RPA as well to be able to analyse unstructured data. And I think that's at the very core of the issue that we're talking about today, the fact that the industry is prevalent with this unstructured data. And then also the ability to draw on AI to format and submit reporting. I think these are some key opportunities in this space moving forward.
We're going to move on probably to the last question for this session. It looks like there is something going on digital reporting, starting with the UK regulator. We understand that the UK regulator is looking to introduce digital reporting. So what exactly is involved in digital reporting, and where are they now in this initiative? And do we expect something similar in Asia? Well, Joanne, you are very close to, you are in Europe. Perhaps you could tell us where the UK regulators are now in terms of this particular digital reporting initiative.
Sure, yes. So digital reporting, it sort of came out of a tech sprint in the FCA in the UK in about 2017. And what they were looking at originally was, I guess, the end-to-end process of regulation. So looking at, from the beginning, from when a piece of legislation or reporting requirements are drafted, or reporting guidelines are drafted, how could you tag those in a machine readable way so that when it came to interpreting required, it would be a lot easier to do and a lot more automatable, basically. So they looked at it from, I guess, the full end-to-end process, starting with, how do we tag natural language and make it more consumable by machines, and then also looking at a common data model that could be used as well. So there was a common domain model, CDM, that was used for derivatives that they used in a proof of concept originally. Where they are now, they've come through phase 2. I think phase 2 viability report was released in January this year. And there's still exploration going on. There's still POCs going on, and they're really assessing now the technology that could be used for this. But I think it's a very wide, when you talk about digital reporting, what does it mean? It means different things to different people. So you could look at it from the whole end to end. Are we going to get to a point where we have lawyers, for example, drafting legal text and automatically tagging them with some machine readable tags? I think we're a little bit away from that probably today. But when you get to the point where you have a data model and a common domain model, can we move into having, data pull and APIs, maybe pulling data and doing things in a more digital way? Yes, and we're already doing that today. For example, in Africa, we work with the Bank of Ghana, and they've got a granular loan level data collection. So it's collecting the full loan book from each bank via API, and that's ongoing at the moment. So I think digital reporting, for me, the technology is here. I don't think it's a technology challenge. I think we can look at APIs. We can look at blockchain in some situations, maybe for certain types of data may be suitable. And where the initiative's going is definitely towards granular data and more automation. But whether we get to that full, that full sort of nirvana vision, I think, of digital reporting will probably take quite a bit longer, because I think the agreement of standards with the industry and making that something that's not just useful in one jurisdiction, but as Catherine mentioned, for global banks having to deal with regulators in multiple jurisdictions. It would be great to have a single definition of what a loan is, for example, but it's not the same. So I think getting to that point will take a little bit longer, but we'll definitely only get there with going more granular and increasing the use of technology.
Okay, thank you. Catherine, do you have any insights on what MAS is doing on the digital reporting front?
Yeah, sure. I think just in April this year, right, the G20 Tech Sprint was kicked off, and it's actually a joint initiative with the BIS's Innovation Hub and the Saudi G20 presidency. MAS and the Saudi Arabian Monetary Authority are also part of it, together with the FSB. And basically, they issued 3 problem statements, trying to look for innovative technologies to help resolve all these RegTech and SupTech kind of problem statements. And one of the 3 problem statements published was specifically on regulatory reporting, looking for solutions that can leverage on harmonized data requirements, talking about the legal entity identifier or even the unique product identifiers, leveraging on all these sort of industry standards that are shared by multiple parties, and also potentially the development of a common code repository for financial institutions to push and pull regulatory reports or data via authorized APIs. So riding on what Joanne just said, I think the technology is going to be here. The technology is already here, sorry, but it's more of the challenge will actually be the collaboration that will be required between the regulators and the industry in order to make this a reality. Because the technology is smart, but fundamentally you need some form of standardization, right, across multiple different parties and entities. And there's going to be a lot of domain subject matter expertise that will be required from the practitioners within the FIs to align on interpretation across the industry for any common standards to be adopted in a pragmatic and a sustainable manner as well. I think just to quickly just touch on the HKMA in Hong Kong, they are also conducting a deep dive study on the needs for or possibilities of machine-readable regulations for selected reg requirements. And so that is also something that's being explored around across multiple regulators. So it's going to be very exciting to see how this shapes up.
And John, I guess you follow digital reporting as well. Could you give us your view on digital reporting, what you are seeing in Australia and probably around the region?
Sure. Look, again, I agree with Joanne and Catherine. The technology is certainly already here, but the raw materials to be fed into the technology are a long way from ready. Of course, one of the challenges that we have both structured and unstructured data that needs to be identified, collected, verified, and securely shared. And that's not as easy as getting it from reality to a proper digital reporting solution in whatever format that takes. It'll be a big undertaking. We can't just adopt machine-readable approach. That only works for certain data types. And I agree that AI can and probably will help, but that also has its limitations if it can't first figure out how to normalize data sets. And even then, it won't be that helpful until we know for certain that we have all the data in the first place. It's going to need to be regulatory driven, but with a significant amount of input from the industry as to what is and isn't possible.
Well, thanks very much, everyone. So before we close this session, we would like to run one final poll. We have heard from our panelists the various challenges banks face in regulatory reporting. It would be interesting to hear from the audience the areas they would like regulators to focus on to reduce their regulatory reporting burden. So I'm just going to read this question here. Which of the following areas should regulators focus on to reduce your regulatory reporting burden? Modernization of the data collection, technical architecture, for example, machine-to-machine submissions, APIs, data pool, provide common data models, for example, follow operational standards, more granular data, digitalize reporting instructions, such as make it machine readable and replacing PDFs with code. I think we'll wait for a few minutes for the poll result to be released.
I think we got the results of the previous poll just put up there as well. So that was quite interesting. We had 15% said yes, they were kicking in or starting in the next 12 months. 23% had yes, but with no time frame as yet, and 25% said no, they had no plans at the moment to look at changing their reporting.
Do you have anything to add to that, John and Joanne?
No, nothing that we haven't
based on
already
the poll results.
Yeah, I mean, I guess it's what we would typically see is maybe back to the point about people tend to scramble around looking at changing their regulatory reporting solutions when there's a big new requirement. I guess what you'd like to see is probably a bit more focus on, as Catherine has mentioned as well, a bit more focus on sort of the core principles and getting that in place first before you make a massive change to your regulatory reporting solutions.
I think I would speak for the banks who are present on this call by saying that if the regulators were to help with a little regulatory push, that would really help them to secure some budget, especially in these sort of tough times right now, where everyone's fighting for budget allocations. Yeah.
John, is there anything that you would like to add?
There's nothing like the threat from a regulator to draw out budget from an institution. And we're seeing that. We're seeing that in some very high-profile cases here in Australia at the moment. I could come back to what I said before. The data, also the technology does exist, but it's going to require a regulatory-led, particularly in a regulatory-led approach to make sure the technology is adopted. I think the final thing from us is, certainly from AUSTRAC, the feedback that we're hearing from our local regulator in this part of the world is that the quantity of data that they receive is significant. The quality of data they receive is not, and that there is a looming opportunity for institutions to take hold of them.
Looks like we are running out of time, so I'm just going to quickly wrap up this session. So we have talked about the changing regulatory requirements as a result of the virus pandemic, and we have also looked at the challenges financial institutions faced in data management and the challenges brought about by system implementation. We have also heard our experts give their views on how the use of AI has helped banks in their reporting tasks. And finally, we are seeing digital reporting as an upcoming trend, and regulators in this part of the world could make it a requirement. But there will be challenges that come with digital reporting, and regulators may need to first agree on the definition of digital reporting. So I think we have probably only started to scratch the surface, but feel free to connect with us if you have questions, and we'll do our best to get back to you. I'd like to thank our panelists today, Patricia Lee, Joanne Horgan, and John Rayment, for the time and comments. Thank you all for being here. Thank you.
Thanks for having us.